Good afternoon and welcome to Matters Financial and Geopolitical from a Frontier. I'd like to thank Amina and Fareed Kimani for the interview this morning on Capital Radio. I took this photograph from the 19th floor of Lonro House, which obviously is referencing Tiny Roland, of course, and I half expected him to pop out from one of the side rooms. Thank you so much for having me on Capital this morning. It was most enjoyable. Macro thoughts. Mark Carney said the pound is either going to move up or down. That was a quote from Bruce via Reuters. Sterling, in fact, rallied as much as 1.5% on Tuesday. And on my screen got as high as 128, which was the strongest level since May the 21st. This is a chart from FX Pip Titan, taken a little bit earlier, but you can see from that chart pretty big surge, and now we're retracing from those levels. And yesterday evening I was tweeting, buy the rumor, sell the fact, ? And I think I'll stand by that actually. I think this 128 level is going to turn out to be a top, and maybe even for the rest of the year. I think all the bulls are in it now. Everybody's long, the shorts have been taken out, and I think, my question is what happens next? Whether there is a soft Brexit or a hard Brexit, the problem remains the same in my view. Out of fairness, here's the full passage of Mark Carney's comments, again via Bruce. Raoul, who had been on honeymoon in Morocco and has returned with and published a whole number of charts, I took the opportunity to reflect through those charts. So let's start with December 2021 Eurodollar futures, and he's very bullish Eurodollars, he's very bullish interest rates. I prefer the short side on this chart. Similarly with US 2-year yields, I think that's overcooked as well, but admittedly I've been thinking that from at least the beginning of June. In June I wrote The Wizard of Oz World, and I said the US 2-year note, which is at around 1.75% then, is the financial instrument with the purest signal, and a whole lot of the world prices off that. Home thoughts. This was Saturday, though the glacier has thinned from my previous visit. This is ACAMS, who's been sharing photographs of Mount Kenya with us. And Brian yesterday was quoting on how you can see the effect of the warming on the glacier. Nairobi town in 1933, this is K Researcher, quite a photograph as well. Political reflections, sunset over Syria, this is from Keir Simmons, little bit of video. Look, a lot has happened there clearly. Let's just try and work our way through. Firstly, Russia calls Turkey's invasion of northern Syria unacceptable, according to the Financial Times. So trying to staunch Erdogan's advance, has said Turkey's military assault on northeastern Syria is unacceptable, heaping pressure on Ankara as Moscow seeks to capitalize on a US withdrawal from the region to help Syrian President Bashar al-Assad reassert control. Mr. Lavrentiev said Moscow had always believed that any military operation in Syrian territory is unacceptable. Turkish-Syrian border should be ensured by way of deploying government forces along the entire border, a suggestion that directly conflicts with Ankara's plan to control a 32-kilometer deep stretch of the country's northeast. The warning from Moscow came 2 days after Kurdish forces struck an emergency deal with the Syrian regime in order to ward off a Turkish assault against them. So it's obviously very fast moving. Ankara, in my opinion, doesn't have any choice other than reaching a deal with Russia and the US. US troops were retreating partially because they were at risk of being engulfed in a broader conflict. Russia also on Tuesday said that its military units were patrolling territory in northern Syria between Syrian and Turkish forces after the American withdrawal from the area. Videos circulating on social media appeared to show a Russian-speaking man filming himself walking around a recently evacuated United States military base in northern Syria. Coalition forces are executing a deliberate withdrawal from northeast Syria, Colonel Miles B. Kaggins wrote, "We are out of Manbij." Look, it's been a very dramatic and fluid, fast-moving number of days, but this Russian insertion started in October 2015 when I wrote a piece calling Putin a geopolitical grandmaster. Let us return to Unga, where Putin set out his stall, and I quote, "I cannot help asking those who have caused the situation, do you realize now what you've done?" he said then. Within 24 hours of delivering that speech, Russia instructed the US should vacate Syrian airspace. This message was not delivered to Ashton Carter by his Russian counterpart Shoigu. It was delivered to the US Embassy in Baghdad. And pretty soon after that message was delivered, Russia began its intervention on the side of President Bashar Assad. And I said then, Putin fancies himself the flycatcher and Syria the flytrap. The speed of execution confirms that Russia is once again a geopolitical actor that will have to be considered. It is a breathtaking rebound, I wrote. So I think that was October 2015. Here we are, October 2019. It's been 4 years, and basically now we can see that he's secured the Syrian borders. I think Erdogan, after much huffing and puffing, will have to pull back. It really is a dramatic intervention. US is hitting Turkish officials with sanctions over Syria. Offensive Mnuchin said on Monday that Trump had signed an executive order effective immediately imposing sanctions on Turkey's defense, energy and interior ministers, as well as the Turkish government's defense and energy departments. Measures were less harsh than many investors in Turkish assets feared. The lira was up more than 1% against the dollar. Piotr Mattis, an emerging markets currency strategist at Rabobank, said there was relief in the markets that the US opted for relatively milder sanctions. The United States will aggressively use economic sanctions to target those who enable, facilitate and finance these heinous acts in Syria, said Trump. I'm fully prepared to swiftly destroy Turkey's economy if Turkish leaders continue down this dangerous and destructive path. Nancy Pelosi, President Trump has unleashed an escalation of chaos and insecurity in Syria. His announcement of a package of sanctions against Turkey falls very short of reversing that humanitarian disaster. These are pussycat sanctions, in my view, on Erdogan, and hence the Turkish lira is a bit of a buy. But subsequently he's brought some more sanctions on the Health Bank, but still, I think this is more form rather than substance. North Korean state media KCNA has released photographs of its leader Kim Jong-un riding a white horse on Mount Paektu. I've written about him severally. At 12th of February 2018, I said what we saw unfold in Pyeongchang marks a significant and iconic moment for the Mount Paektu bloodline. 30th of April 2018, a new history starts now, an age of peace from the starting point of history. More photographs of Kim Jong-un scaling Paektu-san on a white horse are quite something. September 2017, when he let off one of his rockets, a screaming comes across the sky. Overall, I think this is in a cul-de-sac. I think I've written about it before. I said the US can't offer him security guarantees that will encourage him to give up his nuclear deterrent. It's just not going to happen. China's big brother is watching your every move. Asia Times, Hangzhou, Hikvision Digital Technology is operating in more than 100 countries. In the UK alone, Hikvision has an estimated 1.3 million security cameras. This in turn has raised concerns among British MPs after the company was accused of working with Chinese security forces in the world's second largest economy. Essentially, we shared the concerns raised about the role of Hikvision in the UK. Hikvision has been used in Tibet to develop an intrusive police and security apparatus. The system uses facial recognition technology, which can distinguish minorities from ethnic Han Chinese populations. The sophistication of this technology and its sinister use is a serious cause for concern when considering Tibetans and Uyghurs' safety and security. Three largest vendors of Hikvision, Dahua and Axis Communications, have largely grown through organic means. It's quite extraordinary how they've inserted themselves globally. And I was writing in March 2018 about how China had unveiled a digital panopticon in Xinjiang. Dissent is measured and snuffed out very quickly in China. China has unveiled a digital panopticon in Xinjiang, where a combination of data from video surveillance, face and license plate recognition, mobile device locations and official records to identify targets for detention. Xinjiang is surely a precursor for how the CCCP will manage dissent. Actions in Xinjiang are part of the regional authorities' ongoing Strike Hard campaign and of President Xi's stability maintenance and enduring peace drive in the region. And what has taken me by surprise is the way they've taken it beyond the borders of China. Xi is building an algorithmic society, I wrote recently. 5 demands, not one less, source iPress, Joshua Wong. And this is in Hong Kong. The folks in Hong Kong whom Xi is seeking to unmask so he can exercise algorithmic control over them are in open rebellion. China is saying it will accelerate the purchase of US agricultural products. Spokesman says in 2019, Chinese firms have bought 20 million tons of soybeans, 700,000 tons of pork, 700,000 tons of sorghum, 230,000 tons of wheat, 320,000 tons of cotton. I was writing about the pork apocalypse and the very fragile food situation that China has. So this is out of necessity. This is not a part of the deal in any shape or form. They need the food. Very interesting interview, Kyle Bass with General Robert Spalding, China and the US, Trade War to Cold War, worth a read. I wrote about it, China turning 70 on the 7th of October. That article is up on Rich Wrap-Ups as well. The IMF released its World Economic Outlook. Global growth is forecast at 3% in 2019, its lowest level since 2008-2009, and a 0.3% downgrade from the April 2019 World Economic Outlook. Growth is projected to pick up to 3.4% in 2020, a 0.2% downward revision compared with April. Projects a slowdown in global growth in 2019 and a modest improvement in 2020. Let's move on to the currency markets. Eurodollar 110.36, dollar index 98.232, Japanese yen 108.65, Swiss franc 0.9990, the pound, which was just shy of 128, 127.06, the Australian dollar 0.6732, Indian rupee 71.4965, South Korean won 11.8493, Brazilian real 4.1589, Egyptian pound 16.2391, South African rand 14.8849. Dollar index, I still believe we're in a long-term bull trend, but we're pulling back a little bit. Eurodollar, I'm expecting it to sort of top out below 110.60, where it's sort of pushed back from. The most important currency to watch, nevertheless, remains, in my view, the renminbi. This is the China, Asia, EM and frontier markets feedback loop. Purest proxy for that feedback loop is, of course, the South African rand. This is a chart of the renminbi from Raoul. We've softened up to 710.70. Renminbi first day low in 5 days, according to the market here. Gold last at 1483, 1484. We're struggling. We're coming off 1500. Crude oil $52.82. We've come back off recent highs. Absolutely key level looks to be just above $50, as you can see from Raoul's chart. We've bounced from there about 4 times. Copper price in retreat. I've spoken about this before. 3rd of June, I said Lusaka is in an unprecedented territory, and the forced nationalization of Agarwal's copper mines might well be a cashing up moment for President Lungu. He thought he was going to flip that real quick, and he's not going to be able to do that. 14th of October, I said the canary in the coal mine is Zambia. Investors have lost faith in government promises to get spending under control, and the government has fallen out with the IMF as well. That was Charlie Robertson. Eurobonds trading at 60 cents in the dollar. Even the Chinese, who many thought was Santa Claus, have thrown in the towel. Let's move on to Africa. In sub-Saharan Africa, growth is expected at 3.2% in 2019 and 3.6% in 2020, slightly lower for both years than in the April 2019 World Economic Outlook. About 20 economies in sub-Saharan Africa, accounting for 45% of the population, 34% of GDP, which is 1% of global GDP, are estimated to be growing at more than 5% this year. I wrote about the Prime Minister of Ethiopia, EliudKipchoge, the World Bank's Africa Pulse report, Ecclesiastes and Ozymandias, covering some of the African growth story. Paul Wallace published this on Bloomberg. Here are the IMF's latest economic forecasts for sub-Saharan Africa. Zimbabwe's economy is set to shrink by 7.1% in 2019 and to grow by 2.7% in 2020. However, government workers in Zimbabwe can't afford to go to work and may be forced to stay at home after surging inflation slashed the value of their pay by more than 90%. Currency devaluation early this year means that state employees who previously earned an average of $100 a month now earn $40. I've written about this before. Prices climbed 17.7% in September from a month earlier, the Zimbabwe National Statistics Agency said earlier on Tuesday. While the country has suspended the publication of annual data, that rate is estimated in a range of 230 to 570%. 21st of January, I said the point I'm making is that there is a correlation between high inflation and revolutionary conditions, and that Zimbabwe is a classic example. And I also said in that same article, the mind game that ZANU-PF played on its citizens has evaporated in a puff of smoke. 8th of October, I was talking about the government's voodoo economics. Record number of forcibly displaced Africans likely to grow. 27 million people in Africa who've been forcibly displaced from their homes. Figures at a record are nearly triple the number of a decade ago. If forced displacements continue to grow at a current rate of 1.5 million per year, the cumulative total will double in 18 years. 10 African countries with the highest levels of forced displacement create a contiguous arc of instability. South Sudan, 32%, CAR, 27%, Somalia, 23%, Eritrea, 11%, Sudan, 7%. Very worrying. Mo Ibrahim, African Governance Report, is out, focusing on education and health. South African all shares up 5.38% year to date. Dollar versus rand 14.8835, still in that range, 14.50, 15.50. Egyptian pound 16.2369. EGX 30 up 7.86% year to date. Nigerian all share down 15.64% year to date. Ghana Stock Exchange Index down 13.27% year to date. Mohamed Wehliye has written an article in the Daily Nation, How Sleeps on the Job as Country chokes on Debts. Public debt has sharply risen over the last 7 years, reflecting an extremely loose fiscal policy stance, which probably explains the lack of commitment by the government to an IMF World Bank program that requires the country to exercise fiscal restraint. Talking about the domestic portfolio, the mix changed from 15% T-bills, 85% T-bonds to 35% T-bills, 65% T-bonds, indicating that creditors hold relatively more treasury bills, a sign of uncertainty on government fiscal policy. Duration of this portfolio has been shortening, meaning investors have preferred short-end treasury bonds. The debt service to revenue ratio, the amount of revenue that goes to paying debt, has significantly risen to 42%. National debt has reached an unsustainable level of 50% to GDP. In net present value terms set in the Public Finance Management Law, most likely hit that limit a long time ago. Treasury mandarins have used every creative accounting trick in the book to keep within the limit. Parliament also approved that 2019-2020 budget with a deficit of 635 billion shillings, meaning the House has no choice but to approve the new debt limit unless it wants to trigger a shutdown at both levels of government. Saving the country from an economic meltdown should now be President Uhuru Kenyatta's #1 agenda, he says. Wheels come off SGR dream as 35 billion shilling loan comes due. It is not uncommon for a country to create a railway, but it is uncommon for a railway to create a country. Original idea was the new line to reach the lakeside city of Kisumu before slithering into Kampala. Currently it runs from Mombasa as far as Nairobi. They're now opening a piece of the new Naivasha section. Mombasa County are incensed. The SGR is stripping Mombasa of its economic vitality, turning it into a ghost town. Knee-jerk reaction from the government. Financial standard is established. First principal payment for the SGR loan, about 35 billion, is due in January next year. Jubilee administration chose to ignore dissenting voices concerning the bloated cost of the SGR, finally coming to terms with the brutal reality, having not figured out how it will repay close to 400 billion shillings it borrowed from China for the colossal infrastructure. Even the abandoned Lunatic Express, which some derided as going nowhere, had to spread its tentacles to the region to be viable. At its zenith, it went through Kenya and Uganda. Kenya alone has no capacity to sustain the SGR. The country's exports that can be transported on rail are so meagre that if they alone were to be evacuated on the line, the job would be done in less than a week. If you add to this the entire volume of imports last year eligible for railway transportation, about 11 million tonnes, you have traffic of under 15 million tonnes. A 2013 World Bank report showed that for the SGR, with an investment of 325 million shillings per kilometre, to be financially and economically viable, it had to have a carrying capacity of 60 million tonnes and attract traffic of 55.2 million tonnes per year. And then talking about the issue with cargo being trucked up here as well. The line is struggling to reach Kisumu, leave alone Kigali, Juba and Kampala. Uganda's barely started its own. Rwanda's dithering. As a result, the Chinese are holding their horses, despite approving an additional 369 billion for the extension of the SGR from Naivasha to Kisumu. There have been reports that China refused to release the money. Over the past 2 months, KRC said that the SGR had earned a total of 1.2 billion shillings, with the share of cargo being 80%. Currently, China Road and Bridge Corporation has control of the revenue collection systems as well as the custody of the revenues. KRC has in the past pushed for control of both the collection system and the revenues realised. One of the things that was supposed to boost SGR's capacity were the special economic zones, but they remain a pipe dream thus far. Kenya alone means the SGR is pretty much a white elephant. I take you back to my recent article when I said, FOCAC 2018 was the signal. Had our policymakers been taking notes, they would have heard Xi Jinping talk about the end of vanity. which I characterized at the time as a substantive linguistic recasting of China Africa by Xi Jinping. I only recently discovered Ecclesiastes, and clearly Xi was ahead of me in this regard. Vanity of vanities, says the preacher. Vanity of vanities, all is vanity. There is no remembrance of former things, nor will there be any remembrance of later things yet to be among those who come after. It seems to me, I wrote, that we're at a pivot moment, and we can keep regurgitating the same old mantras like a stuck record, and if we do that, this turns Ozymandias. My name is Ozymandias, King of Kings. Look on my works, ye mighty, and despair. Nothing beside remains round the decay of that colossal wreck. Boundless and bare, the lone and level sands stretch far away. Nairobi All shares up 4.06% year to date. NSE 20 is down at 13.96% year to date. Thank you for listening.